Welcome back to It's Only Money with me, Ryan Holmes, and financial advisor Scott Brown with Edgewater Family Wealth. If you need to get a hold of Scott, that number, of course, is 407-6, the prophet from Omaha or whatever. In this market with all the technology, or is he the version of like, you don't know what you're talking about, old man, things have changed?
He's probably a little of both, but to give you an example, most of our listeners have heard of Kathy Wood, who runs a fund called ARC. And ARC is a technology-laden product. It has Tesla in it. It has Roku in it. What else does it have, Tammy?
Basically all the new technologies, and they have different funds that service different technology sectors, like for batteries, for lithium, for even space exploration, for instance.
Yeah, so everything sexy you can think of, she owns. But if you and she was killing Warren up until about 8 to 10 months ago. Now, if you look at the 5-year returns, they're dead even. And Warren did it without the excitement and without the pain. But so the point is, I think he's still the oracle from Omaha. And I think there's still room for people to have aggressive technology-laden portfolios. But at the end of the day, his is a buy and hold strategy. And we can talk more about how he does it and what he does when we come back, I suppose.
All right, we'll be right back with more It's Only Money with financial advisor Scott Brown. And you can reach Scott at 407-648-1881. We'll be right back. And welcome back to It's Only Money with financial advisor Scott Brown with EdgewaterFamilyWealth.com is the website, or you can reach Scott by phone at 407-648-1881. And we're talking about the ARC number before we went to break. And so I'm assuming technology good, always growing, always doing well. So that must be doing amazing right now.
Tammy, what are Kathy Wood's numbers on the ARC portfolio over the last, say, 3 months or so?
We're looking at about 43.6 down.
Ooh.
Yeah.
So what is
that?
So
let's get. Go ahead.
No, just what does that mean? Because I think you think technology is only going up. Technology only gets better. What would 40% down is a lot.
It is a lot, but it's not a lot in that sector. So again, if you need context, people hear that number, say down 40%. That's insane. I would never want to own anything like that. But again, when you're dealing with volatile asset classes like technology stocks, that's part and parcel. That comes with the territory. It's why those, and I would argue Kathy may outperform Warren Buffett over the long term because of those stocks. But the ride is much rockier. And if you want a higher return, you have to embrace the idea that it's going to be more volatile. The less volatile the ride, the less likely you are to have a good long-term return. Now, to be fair to Warren Buffett, his numbers are as good as hers if you look back over the last year or two. It's just been a less sexy ride, and it's a different approach to the same idea. I think Kathy Wood probably thinks of her portfolio, and I shouldn't speak for her, but I think she probably thinks of it like a venture capital private equity, where she's going to buy 10 stocks. 2 or 3 of them are going to be horrible. 4 or 5 of them are going to be okay, and a couple of them are going to be rock stars. So, I mean, that's her method. His method is, I'm going to buy Coke, I'm going to buy Wells Fargo, I'm going to buy big railroad companies, and if I don't like the way they're going, I'm going to buy enough stocks so that I can make them do what I want them to do. And that's something the average investor can't do. But again, if you look at Warren Buffett's annual report, if you look at the Berkshire annual report every year, you're going to see a list of the most boring stocks you've ever seen in your life. But you cannot argue with the long-term performance of Berkshire Hathaway.
I can't, but one of the weirder parts for me is all of the houses in my neighborhood seem to just go up for sale at the same time. Like, so suddenly I'm seeing, like, your standard realtor, the names that you know. But then also I noticed a black sign a lot, and that was the Berkshire Hathaway Realty Company.
Yeah, he's into everything, brother. He's got it all covered. Yes, they own a real estate company. They do. I mean, he's a very diverse. He owns railroads. He owns banks. He owns boring companies like Coke. He actually even owns some Apple now, which he resisted. He, by his own admission, he got in late to the Apple story, but he loves Apple now. So again, Warren Buffett does not have a crystal ball. He's just got patience and discipline. And I don't know how many times I got to say that on this show, but patience and discipline are where the money are made. Speaking of real estate, Tammy, didn't you tell me you just recently saw the cost per square foot of housing?
Oh yeah, the average price per square foot in the U.S. For 2020, we're looking at $122. That's the average across the entire country. Now, remember, it will vary from one region to another, like the Northeast versus the, say, West versus Florida. But that is the average.
And that was 2020?
That is 2020. That's the latest number we have.
Oh, okay. 122 per square.
Per square.
I'm guessing that number's higher today.
Easily.
Yeah. I mean, if you look at the Orlando market, I mean, it's obviously there's a lot of people who have caught on to the idea that we don't have income tax here. I don't know who told them that, Ryan.
Yeah, the secret's out on that one.
Yeah, I feel like we should go to the border at Georgia and Alabama and just put a sign up, we're closed. Because the numbers of people moving to Florida are driving our house price. You know, back when I was a kid, which was a long time ago, it was typical for a Northeasterner to sell their home, say in New Jersey or Pennsylvania or New York for say 600 grand, 650 grand. They would sell their regular house, and they would move to Florida and buy twice as much house for 200 grand. That used to be a thing. That is no longer a thing. So selling your home in the Northeast, pocketing the difference between the sale there and the purchase here is no longer as prevalent. That said, it doesn't seem to be slowing people down in terms of their moves, not only to Florida, but places like Texas, where they seem to be a little bit more less costly, I suppose, when it comes to the tax rolls.
Yeah, it's almost seemed like for the longest time, people that lived in the North were essentially from a different country. Like their dollar was worth more than my dollar, you know, and then they could come down here and then buy these like giant houses, like you said, for like $200,000, and you see what they came from, whether it be like a tiny apartment they were paying $800,000 for in a city, or just like a little dopey house for like, you know, $800,000. It's insane. So that's not a thing anymore in Florida. But we're not making any more money here in Florida. So these people just coming down and retiring and not having jobs after this, or is it working remotely? I mean, how do they afford that lifestyle on Florida money, since we notoriously low on average, pay around here?
Yeah, so I mean, I think you hit the nail on the head. A lot of these people are part-timers. They're coming down. They may be telecommuting, I suppose. They're working from home. A lot of them are tech people. I was at a conference in Miami about 3 weeks ago, and 1 out of every 2 people I met was either from New York City or San Francisco. And so a lot of these people are escaping these tax-heavy regions to come here to Florida, which is driving our house prices up. And we can talk about that in a second. But they're not relying on our wage scale here, which is considerably lower than a lot of those places for a variety of reasons. They're just coming here, working from home. Maybe they're flying back every once in a while, but they're establishing a residence here so they don't have to pay their state's income taxes. And I would argue that most of those people are a lot of them anyway, are in the tech industry, and a few of them are retiring. I have friends throughout the country that are moving to Naples or moving to Boca or moving to Miami itself, and just simply retiring. But you're right. The days of the person selling their tiny little home in the Northeast for 600 grand, buying one here for 200 grand, and putting 400 in the bank to live off of, that business model is just about done.
So I was here, and you're the financial expert. I'm definitely not, for everybody who's listening, especially if people know me from the Monsters. Definitely not. But when it comes to, you always hear, well, real estate always outperforms the stock market. Is that really true?
No. Which is, I think, a point to be made here is, if you ask the average person what the best investment they ever made was, Ryan, they're probably going to say their home, right? Mm-hmm. And so then that begs the question, why? Why would they say their home? And I would say the answer is not the return, because to your point, the stock market over the last 50 or 60 years has far and away outperformed housing. So then you say, well, then why is that their best investment? And I have a simple answer for you. They can't sell it. So if you think about 2008, And you think about what happened to housing prices, not only in Florida, but throughout the country. And the average family's living in a house that they maybe paid $300,000 or $400,000 for. And they woke up at the end of '08 and that house was worth 270 or 260, right? Did they sell it and move away?
No.
No, they have to live somewhere, right? So the difference between stocks and housing is that when you don't like your stocks and you think they're having a bad day, you push the sell button, right? If your house is having a bad day, your wife, your kids will be very frustrated with you if you move them to a tent at the local campground. You cannot, people just don't sell their homes. And that's the reason that if you ask the average American what the best investment they've ever made is, they will say their homes.
Yeah, I mean, so I recently purchased a home before the market went crazy. And when the market did go crazy, me being what I would call too logical sometimes, I'm trying to convince my fiance, I was like, we got to move. Like, we got to sell this house. And then to her credit, she goes, where would we go? Everything else is crazy expensive as well. To which I replied, very incorrectly, we could just get an apartment and live in that, and we'll make our money back that way. And that did not go over well at all.
Yeah, so you're going to bank, let's say you bank $100,000 in profits, and then you're going to spend it on rent for the next 2 years. I don't quite follow the line. And this is what you hear from people. You know, they will say, you know, this market, I can get a crazy number for my house without even stopping to think for a second that they need a place to live. Yeah. A, and B, the house they purchase will also be at a crazy amount. But people do rationalize these things. They do come up with reasons why they need a bigger, better house, or what this sell they're going to make in their current home to buy another home is some kind of brilliant decision, when in fact you're just going from, you know, one expensive home to another.
Well, my home is definitely my biggest and best investment, but I'm just a regular person. I'm curious to see when we come back from the break, and you can take the break to think about it, Scott, but what would you say your best investment would be as a man who is a financial planner and a guy who deals with money?
Got it.
All right, and we'll be right back with more It's Only Money with financial advisor Scott Brown, and you can reach him by going to edgewaterfamilywealth.com, or the phone number is 407-648-1881. We'll be right back. Welcome back to It's Only Money with financial advisor Scott Brown of edgewaterfamilywealth.com is the website, and then the 407-648-1881 is the phone number. And here's a fun fact, listeners, you can also email your questions to Scott if you have anything. It's basically, you know, you're getting the free financial advice. All you do is email Scott at edgewaterfamilywealth@raymondjames.com, and we will answer your question on air. So how about that? But before we left for the break, I said my investment, obviously, as a novice, is my home is my best investment. I asked Scott what his is, and I'm curious to find out that answer.
Yeah, I mean, that's a tough question. And my mind goes away from securities and bonds and real estate to, and I'm going to give a shout out to an advisor in my office named Rob Lagenhausen, who once said the best investment he ever made, and the one that always pays off, is in himself. Which I know sounds a little esoteric and a little touchy-feely, but the reality is the best investments I've ever made are in my business, in myself, in my education, in knowledge, and an investment in discipline and process. Here we go again. So for me as an entrepreneur, my best investments have always been in my team, in myself, and in my business. And I don't know, I'm trying to think of how I can translate that to the average investor. And what I would say is that in my book, I wrote that there's something I like to call an investapreneur. Easy for me to say. An investapreneur. People think of entrepreneurs and investors as different things. I do not. If you think of yourself as an entrepreneur, even though you're just investing in stocks and bonds, you're investing in those companies, right? And your entrepreneurial endeavor is buying those companies, giving yourself a discipline and a process to monitor those companies, to watch those stocks, to say, this is why I bought Coke, or this is why I bought IBM, or this is why I bought Microsoft. And this is part of my entrepreneurial endeavor. Even though you may not be an entrepreneur per se in your occupation, you may be a doctor or a lawyer or a contractor or a carpenter or whatever you are, but you can take off that employee hat every night when you go home and look at your statements and think about your investments. Maybe you read a little bit. Maybe you read a book by Charlie Munger or Warren Buffett, a book by Mark Cuban, a book by Benjamin Graham, the father of investing. Take some time. That's an investment in your mind, in yourself. And I think those investments, Rich Dad, Poor Dad, The Millionaire Next Door, I could go on all day about.
Scott, I'm going to help you out here. Also, a book you can get is called "I've Never Made Anyone Rich" by Scott Brown.
Yeah, that's not a bad one, actually. I mean, the guy's kind of a goof, but it's worth looking at. So, I guess my answer to your question is kind of a lame one in some ways, but the reality is I think the best investment people can make is in themselves. And I think a lot of people go wrong by, just they watch the TV or they read a magazine and they say, all right, I've got this figured out. That's not much of an investment. Spend the time to get the knowledge, the foundation for good decision making. And, I would also argue, and this is maybe, I'm a little biased here, but I think invest in relationships. Invest if you have someone, a financial advisor that you have now that you really like. Don't just talk to them once a year. Go see them 2 or 3 times a year. Have meaningful conversations. Have a cup of coffee with them. I have coffee and/or dinner and/or possibly a drink occasionally with clients all the time. And a lot of times it's not about the statement or the stocks or the bonds. It's just what's going on in life, how's your business going, what's going on in the family budget. It's more conceptual than anything. So I think investing in yourself and investing in relationships is the best thing anybody can do.
I don't see that as an esoteric kind of like crazy answer. I think that's exactly what people need to do, whether it's just the learning and just betting on yourself is always good. But what do you think, maybe is a question for another time, really. But like this, if you're a young person, you just hit 18, would you say, hey, you should definitely go to college and go into student loan debt and you'll hopefully learn something that way? Would that be the advice you would give somebody?
No, I would not. And this is, we're not touching on anything we haven't all heard here recently, but this idea that somebody has to go to college to be successful. I'm going to tell you right now that I'm trying to make sure I'm right about this, but I think for sure my best client has a 10th grade education, and is a tradesperson, but built a business off of that trade. I think out of my top 5 clients in terms of their net worth, I think at least 2 or 3 of them are not college educated. So, college is great. College is a great equalizer. It's where you meet people. It's where you learn to grow up in a semi-controlled atmosphere. There are many wonderful things about college, but I would argue our college system is somewhat broken. And I've also written about, here comes another shameless book plug, and I've Never Made Anyone Rich. I wrote that what college sometimes teaches people is to be 2 things, an employee and a consumer. And when you're taught to be an employee and a consumer, you're kind of serving the same God all at once, right? So, I mean, think about the college experience and think of it as a way to grow up. I think of it, and if you're going to be a doctor or you're going to be an engineer, certainly the academics themselves are critical. But I think going into a huge amount of debt makes 0 sense. When you think about how far behind you're going to be, how long it's going to take you to pay off that debt. And here's another thing. I don't understand why we've convinced college students they don't have to work. I mean, I worked all the way. My wife worked 3 jobs at one point through college, and we had tiny bits of debt, but not a lot, because you know what? Who says you have to finish college in 4 years, first of all, other than the universities, because they want to churn you in and out so they can make money? Why can't you take 7 years, but work part-time and not have student debt? First of all, P.S., that working that you do during college will be as valuable or more valuable to you than the college itself, because you'll learn to interact with people. You'll learn to communicate. You'll learn how to deal with a cruddy boss, a great boss, a bad coworker, an upset coworker, a mad customer, a happy customer. I mean, I bagged groceries and stocked shelves for many years while I plotted my way through college. And I promise you, Ryan, it was not in 4 years that I did that. As my friend likes to say, it's the best 7 years of his life. So, the reality is there's so much to be learned from a part-time job. I would say as much or more than just going to college. So the idea that you go to college, you get an engineering, or worse yet, and I'm not picking on history majors because we need them and I love history. But the fact of the matter is, if you're interested in history, if you're interested in World War I or the Civil War or European wars or whatever it is, they sell books for that. You can go to the library for that. So I don't know that college is for everybody. In fact, I'm sure it's not. And I would argue it's not for most people, but it's what people have been told. They've been told to go to college, learn to be, I think I made the joke when you go to career day at college and you're walking around and all the companies are, there's almost like a cattle thing. Like they look at your teeth. Oh, he's got good teeth.
Yeah.
Doesn't smell too bad. This guy, it's a weird thing. So I would argue, and I know I'm giving you a long-winded answer, but it's something I'm passionate about, is that college is great. And for some people, it's wonderful. And I enjoyed it, certainly. But it is not for everybody. And I promise you that it is not the only path to wealth.
I got to 100% agree with you. The most I got out of college, and I have 2 degrees, is this weird, intangible life experience that opened me up to the world a little bit more. But if you asked me the question, hey, Ryan, we got this time machine. Do you want to go back and undo that? I'd probably say, yeah. There's more I could have been doing. And I definitely worked part-time, working in restaurants and stuff, and learned a lot about people. But the most I got out of it was a bit of networking kind of stuff. And it broadened my horizons from leaving my small town of Apopka, Florida. So is the price tag of $52,000 in debt worth that? No.
Yeah, I think that's going to change. I think there's a lot of pressure on these schools. Scott Galloway, who's a fairly famous professor at NYU, is fond of saying it's the only business that we're proud of not scaling. Harvard and the Ivy League schools brag about how many people they turn away. Shouldn't it be the other way around? Shouldn't we be bragging about how many people we put through the system and we don't fill them up with debt? We've told these people that you don't have to work, just borrow $200,000. When we come back from break, we can talk about the disparity that doctors go through, even, which we think is it is a highly paid occupation, but we can talk about their debt and the struggles that many of them have.
And we will talk about that and more when we come back with more It's Only Money. You can reach Scott again with the phone number 407-648-1881 or go to edgewaterfamilywealth.com. We'll be right back. Welcome back to the final segment of It's Only Money with financial advisor Scott Brown with Edgewater Family Wealth. You can go to edgewaterfamilywealth.com or you can reach Scott at 407-648-1881. You can also send an email to edgewaterfamilywealth@raymondjames.com, and we will answer your question live on the air. But Scott, before we went to break, we were talking about doctors and the amount of debt doctors have to go into for their school. Now, that's investing in themselves, but that is a huge investment.
Yeah, and it might be the one case, or not the one case. There are a few cases where you can argue that going into that debt might make sense long term. But I also think that sometimes people don't really understand what physicians go through. I mean, a lot of them don't begin working till they're in their early to mid 30s, especially if they specialize. You think like a brain surgeon, that particular, he or she may not start working until they're 35, really earning real money. So you say, well, they make a lot of money. Well, yes. And I want my doctor making a lot of money, by the way, if they're operating on my skull. But the truth of the matter is they're so far behind. Think about a person who goes into the workforce at age 18 or 19. Maybe they do a trade or they work at a grocery store and move up into management where they can make 70, 80, 100, 150,000 by the time they're in their 40s. They're accumulating stock. So you think, well, that doctor's got it made. That doctor makes 300, 400, 500 grand as a specialist, but they've also got $300,000 worth of debt the second they hit the ground running, and they have not worked until they're 35. So thank goodness for doctors. I think we need more of them. We need more nurse practitioners. We need more PAs. We need all of those things. And certainly through COVID, they were somewhat heroes to all of us. But the reality is, if you think with envy about your physician, trust me, the trials and tribulations that person went through and the amount of debt they came out of med school with, and that's just one example. That could somewhat be said for law school. It could be said for quite a few things, but that's the easiest one to pick at. So again, when you make a decision, Tammy was talking earlier at the break about the investment you're making in yourself. If you decide to borrow 200 grand to get a degree in medicine, okay, you can extrapolate the salary that you're likely to get over your lifetime and say, yes, that probably makes sense. But if you get a liberal arts degree, I'm not belittling a liberal arts degree, by the way, I have one myself. But if you're going to get a liberal arts degree and you're going to borrow 200 grand for that, climbing out of that hole at 40 or 50 or 60 grand a year, that's a 10-year climb for you. So you might want to decide, do I really need the history degree, or should I just go to the library and read those books and become a tradesperson or a plumber or an electrician, which, by the way, some of the wealthiest people I know are tradespeople. So again, I think it's a matter of sitting down and this goes back to the same thing, Ryan. You said, well, when you're 18, how do you even know? Well, you don't know. A lot of that's driven by your parents. And I can tell you that parents don't always make the best decisions here, because what do parents want to say, Ryan, when they're talking to their friends over dinner about where little Jimmy went to school?
Oh, buddy, when I was, I totally know, because when I was on the path to go to law school, my mom would talk about it to her friends all the time. And when I decided to become a comedian, those conversations weirdly stopped happening.
Yeah, because the parents like to say, well, you know, she's going to go, little Mary's off to Harvard. Oh, they cannot wait to say that without thinking about the cost, or NYU or Stanford or whatever it is. And don't get me wrong, they're wonderful schools. If you went to one of those places, don't call me. They're great places. But that's not for most people. And they certainly don't want to say, well, you know, little Jimmy's headed off to Valencia or Santa Fe, which is where I started. So parents don't want to talk. Parents a lot of times drive this need to go to Virginia or Vanderbilt, and the kid doesn't even know why they're going. Mm-hmm. They have good grades, but they don't know why they're going. So I don't want to carry on about college forever, but it is certainly a tougher, harder, more complex decision than most people make it out to be. But I do know we have some questions, so I'll shut up about that.
Well, actually, it leads me, because I have this email from Nick in Ormond Beach. And it's interesting what he says, because you said a doctor, you know, they don't get started till they're 35. Retirement age is, 60, 65 roughly. And his question is, when it comes to retirement, the point of it all is basically to just do nothing. How do I get to the point? This is interesting. How do I get to the point where I can do that with all the debt that I have and just not work? Is that even possible anymore in America?
I would say the better question is not, is it possible? Because it is possible, but is it optimal? I mean, do you really want to do nothing? I have been doing this 35 years, and I've seen people, quote unquote, retire in different ways. And some people retire to the easy chair and they watch television very loudly because they can't hear anymore. And that's all they do. That's not good for your health. That's not good for your mental well-being. And if you think back to the mid 30s, when we came up with Social Security at age 65, right? Do you know why 65 was a good age?
Because no one made it to that age, so it was a false promise, is what I'm going with.
You are dead on correct,
wow.
Pun intended. So most people, the average life expectancy was 64, 65. So they really didn't intend on giving anybody this money, right?
Wow.
So that was born. So when they came up with that program, the Social Security program was kind of fashioned after some of the pensions that existed in the private community. The first of which, and there was a company called Alfred Dodge and Company. Do you know what they made?
Dodge trucks.
That would be a good guess, but a wrong one. They made pianos in the late 1800s, and what they did was they set aside money for their employees, 1% of their salary every year, and added 6% to it in order to provide for those employees when they retired. And, when we came up with Social Security, when we came up with some of these pensions, we were all doing backbreaking work on average. We were farmers, we were laborers, we worked industrial jobs. Our parents went off to the coal mine, they went off to the textile mill, and their bodies were literally beaten to hell by the time they were in their mid to late 50s. So
oh my god, yeah. If you look at a picture of a 30-year-old back then, and they look like they're 75, they've seen all of the life.
Yeah. So the answer to the question is, can I do nothing? Sure. Do you want to do nothing? Probably not. And I would argue, if you do retirement planning and your plan is at 65, I'm going to do nothing. And then you look at the statistics on what you need to save and what you need to have invested at that point to do nothing, it's a lot more money than if you're going to do something. And what I mean by that is, we've all seen the retired guy at the golf course, right? He's the ranger. He's usually really grumpy and has a clipboard.
Yeah.
That guy's doing something every day. He's not making a lot of money, but the money that he makes, that pocket money, if you will, means he didn't need to save quite as much, and it makes his standard of living the same as it would have been if he'd saved a bunch of money. So my point is that I don't know that we want to view retirement as this drop dead situation. I think we kind of ease into it. There was a book called The New Retire Mentality, written by a guy's name, I think his name was Mitch Anthony, and he talks about, since we're not doing backbreaking work anymore, we're not out in the fields, most of us, all day. And even the farmers that are in the fields are in those cool John Deeres with stereo systems.
Oh, they're so cool. Yeah.
They are cool. I really want one of those. But we're not doing backbreaking work. And so our bodies aren't breaking down. We should be in better shape. We know people are living into their mid to late 80s on a regular basis now. So the idea of retiring at 65, I think, first of all, is a dated one. I think the idea of retirement is somewhat dated. And I'm telling you that as a guy who does retirement planning. So your planning should not involve just how much money can I put in a bucket, but if I'm a lawyer or I'm an engineer or I'm a physician, or no matter what you are, maybe you could work 10 hours a week. Maybe you could work 20 hours a week because you want to get out of the house, right? There's an old joke. I had a physician client whose wife once said to me when he was getting ready to retire, she's like, listen, I married this guy for life, but not for lunch, right? She wanted him out of the house because he was following her around the kitchen all day.
Yeah.
So
that's what I think happened with Tom Brady. That's why he unretired so fast.
Yeah, exactly. She's like, get out of here. You're annoying me. So the point is, when you think about retirement, I think people need to stop thinking of it as one day I'm working, one day I'm not. I think it should be, I'm going to ease into this. Maybe I'll be working in my mid to late 70s, which candidly a lot of people do now. I have a lot of clients who do kind of contract work, or maybe they were an engineer and they stopped working for the man, so to speak, but then they kind of contracted back for 3 or 4 days a month. In a lot of cases, you can make more money doing that than having a regular job, because the companies are willing to pay you more because they don't have healthcare costs. They don't have a lot of the overhead or HR issues that they would have had with you as an employee. So my point is, first of all, look up Mitch Anthony's book, because I think it's a really good one. And secondarily, that stop viewing retirement, unless you really, really want to, as I work today, I don't work anymore after that day. I'm just going to sit around and do nothing. Because first of all, I think it's going to rot your brain and make you a very grumpy person.
1,000%. And plus, like, even if it's not like quote unquote working gives you a purpose in life, and it does keep you going. The anecdotal evidence there, when you see somebody as an older person just kind of stop, their quality of life just seems to go down fast.
Yeah, and work doesn't have to be what you did in your professional life. It could be volunteering. It could be any number of things that pay you less but give you more personal satisfaction. And
if you want, retiring, and you're thinking about that, and you want all of the good stuff that comes with that, so you can do what you want later on, that's when you go to Edgewater Family Wealth and edgewaterfamilywealth.com. And if you want to get a hold of Scott, that number is 407-648-1881. Plus, Scott has a book. It's called I've Never Made Anyone Rich. You can find it on Amazon. If you got a Kindle and you got Kindle Unlimited, it's on there for $0. I'm looking at it right now. So check that out, because Scott won't tell you to read his book. I got to do it for you.
Wait, $0?
Well, on Kindle Unlimited, yeah.
Oh, this is a bad business.
You are super bad at this. The marketing part we'll work on, but when it comes to retirement and managing money, he is a genius. So go to Edgewater Family Wealth. Thank you, Scott. If you want to send those emails in, it's edgewaterfamilywealth@raymondjames.com. Scott, Tammy, have a beautiful day.
Likewise, brother.
Likewise. Thank you.
Yeah, and clearly people are rich, right? Or wealthy. You don't have to be rich. I like the term wealthy better. I mean, to rich reminds me of like the Monopoly guy or something. But, they're people, they're regular people.
Now that guy I trust. You see the problem, Scott? You don't have a monocle.
Monocle is, now, if you can meet a guy with a monocle, I mean, like, I'm all in.
What was his financial advice? He said buy Park Place?
Where is that?
Where is that? I can't find it.
Tune in to It's Only Money with Scott Brown from Edgewater Family Wealth, Sunday mornings at 7 on Real Radio 104.1. Raymond James Financial Services, Inc., member FINRA SIPC. Edgewater Family Wealth is not a broker-dealer, is independent of RJFS.